It's just a plod. It's a plod, a long-term plod. But if you were 23 and you go on it, by the time you're 40, you'll have capital. You'll have serious capital, serious capital. You'll probably be better off than anybody else of the crew that left school with you, by far. As I say, it's the only way that I know of that the normal person, Mr. Average, can build up proper large-scale wealth.
Hi folks, today we have a very special guest on the podcast, Clem Chambers. Clem is an author, journalist. He's the founder of ADVFN, one of Europe's leading stock websites. He is the general partner of ULEM Capital. He's penned a number of books, including Letters to My Broker, The Death of Wealth, 100 Ways to Pick Stock Market Winners, and A Beginner's Guide to Value Investing. Not only that, but he's actually branched into fiction side of things. He's even been described as the John Grisham of the financial world. He's appeared on CNBC, Al Jazeera, BBC, and now he's here on Little Old Stock Club. Clem, welcome to the show. Thanks for coming on.
Great to be on. I mean, I love coming on these sort of podcasts because, I discovered recently, well, not a couple of years ago, people started to stop me and say, "You're the guy on Kitco. You're the guy on blah blah blah. What podcast aren't you?" And I used to do CNBC like every month for a couple of times for like 10 years. And I only got a funny look on the street once, right? 10 years. And I used to do, I even hosted Christmas Eve for them once in Europe. Nothing, zero, zippo. And that these days I do podcasts with people who have 1,000 subscribers or, a handful. And I go to a show and people say, "Oh, you were on that thing on YouTube." So these things punch really hard because your viewer, you there, you're a very serious person. You're not just got the screen on and you're doing the crossword or whatever, or you're in a lift and there's someone going on the screen in the lift. You have no idea what they're saying. Most TVs don't even have the sound on. But when someone's watching a YouTube, they are fully engaged, and that makes them a very, very good viewer. And that's something I'm very happy to talk
Brilliant.
to.
Well, I'm delighted to have you on, and I've got a bunch of questions, but I guess we'll jump straight into it. So you describe yourself as a contrarian when it comes to investing, and on top of that, you're a value investor, which probably doesn't really match with the current state of the market, especially in the US right now. So have you been on the sidelines? Are you involved in the most recent rally? Where is your kind of investing sentiment right now?
Okay, let me tell you, I got out before the roof came in. I saw that coming. I saw that the wild man of the White House was going to say some things, and it was all going to come down. So I was out before the roof came in, and then it crashed, and I thought, clever me. And then it turned around and went up like a rocket, like I've never seen, and never in history has a market bounced like that. But at the bottom, I rotated some of my capital into defense stocks and precious metals. So I was sat there going, "This is incredible. What is this? I don't get this." I mean, it turns out in my book that basically the US Treasury pumped a load of money into the market to prop it up. Yeah. And you can't back those sorts of things. You can't imagine that A, they'll do it, B, they'll get away with it, and C, it'll work. Yeah. And it did all three things. So up it went like a homesick angel. But I was sat on a large chunk of these defense stocks and a large chunk of precious metals. So I kind of made half of what I would have made from this incredible rally. Now, what's happened since, which was no predicting of, is that people are running away from the dollar in the States. And they're doing it by flipping out of stocks in the US and flipping into ones that are very similar but denominated in other people's currencies, like the euro, like the pound. So you've seen value and contrarian stocks do really, really well. I mean, unbelievable. If I kept hold of my portfolio that I bailed out of, I would have made a very large fortune as opposed to the small fortune I've made instead. But, zero risk of the downside and then half the upside, that I'm happy with that. I mean, I get less happy as I look at the extra bit that I would have made. I would have made twice as much as I made from my positions in defenses and precious metals. But I basically had none of the risk of a further collapse. So, I'm made a bit of money, happy with that. But these are very, very volatile and difficult to predict times. And my positioning is deep value, very, very deep value, which is going up because there's this dollar trade. We don't want to be in the dollar. The dollar's going down. We don't want to be out of stocks, so we need to be in stocks. So let's get into some dividend paying, high quality non-American stocks. And that's inflating, that's pushing up those things. And that's where I live. I live in high dividend paying, contrarian value stocks, and they've done brilliantly. I mean, they've absolutely spectacularly risen since the miracle on Wall Street a few weeks
Yeah.
ago. And so I'm perfectly placed for
So
that.
what regions have you been looking at? Because we talk a lot about the importance of international diversification, and we concentrate on areas with really strong stock markets and really strong local investing culture. Sweden, we always talk about of how strong the investing culture is there. So what regions have you been looking at?
Well, I have to say that my specialty is the UK, and I love the UK. It's the world's dullest, worst performing
I was
market
going
of
to
all time,
say, yeah.
and it is so awful. It's just horribly awful. But that means it's also incredibly inefficient market. So you can buy Babcock and make 400% on your money, and you can buy Rolls Royce and do a 10x on Rolls Royce. I mean, it's just like, I love that. As a contrarian, I love that because the market isn't working properly, and therefore you can go and you can buy a stock and go, I'll have that. I'll sit on it for 3 or 4 years, and I'll get an X factor, not just a percentage return. And there's so much value in the market. It's been asset stripped by international investors, without a doubt. And the market is down from 2,200 shares to 1,600 now. They've lost a quarter of the shares on the British stock market. It is so rubbish, but it also means it's so cheap. And, somebody shows up, American, and says, hey, I can get this at a third of the price of my earnings in the US. So I can get it at the third of the price. So I'm going to earnings enhance myself and expand my international footprint. I love that. Thank you very much. Ka-ching. Which is why there's no tech companies in the UK anymore. Well, not many, because they keep getting asset stripped. Hey, ARM,
This is what
goodbye.
I was going to,
Hey, whole load of a list, goodbye. We got bought. See
yeah. Well,
ya.
this is what I was going to ask is why do you think, and I think you've kind of half explained it there, that the London Stock Exchange is in decline compared to not only the US, because I think the US is this whole encompassing thing, and two-thirds of public stocks are now in the US, two-thirds of market cap are now encompassed in the US, but even like trailing other stock markets like Australia or like Sweden, like we mentioned already. Why is the US, why is the UK falling so far behind?
Because once upon a time, in a galaxy far away, after the dot-com crash, the British government said, hey, pension funds, you're not going to invest in equities anymore. Stop that. It's naughty. You're gonna invest in our bonds because we want to borrow money and we don't want you wasting it on funding British industry and our tax base. You need to give it to us because we need to spend it, or rather we want to. And so you're not going to be doing any of this, putting your money in equities. You're going to be putting it in bonds, and we're going to come up with some matching your liabilities with your asset gobbledygook. But basically, you got to buy government bonds, stop it with the equities. And so the institutions did.
That,
There you
that's it.
go. No institutions in British equities. And funnily enough, the prices don't go up, do they? Because the most important investor of your equity market has been told to stop it, and they stopped it. And now government spotted this, and they went, oh, you institutions, you pension funds, you're not buying British equities. You've got to do that now. And the institutions go, well, we'll stop buying your government bonds then. And they go, hold on a minute. No. We need that money. You've got to carry on investing in our bonds and the rest, which doesn't exist, you've got to put into British equities. That doesn't work, does it? No, but please don't stop buying the government bonds because we're bust. I mean, you've got no money. We need you to put all those pensions into our bond confetti, not into investing in the tax base of British industry. No. Now, whatever you do, don't stop giving us the money. So they're in a catch-22. Now, the way around it that they'll probably try to do some footwork on is they will say, actually, by the way, you don't have to have, you can lever yourself up now. We told you to stop leveraging yourself up because that means you go bust in a financial crisis. Well, maybe we change our minds now. So you can keep sending us money for the bonds and do a bit of investing into the tax base of British industry now. And of course, is that going to work? Maybe. Oh, we've had a great idea. Stop putting your money in cash ISAs. Stop doing that. I know you like to do that because every time you put it in the British stock market, which we heavily regulate, but regulate badly, you lose your money. So you go, I might as well keep it in cash then.
Yeah, and
Oh, no, let's put it in stocks now. So put it in
but
stocks. Oh, why? Well, we're going to shut that cash ISA thing down. So you have to put it there. And of course, what people will do is they'll just put it into property, won't they? They won't put it into equities.
100%, we have this issue in Ireland as well, and it's unfortunate the retail investor is completely forgotten about in Ireland, and I wouldn't say the same in the UK. But speaking of retail in general, have you seen um, this kind of retail sentiment before? I suppose resilience, because especially in the US more so than the UK and Ireland, anyways, the resilience of the retail investors
Well,
have
the
been
US has,
propping up the entire
yeah,
market for a while. They've been the net buyers while institutional have been getting out over the Liberation Day stuff and everything that's happened since.
I'm not so sure about that. That's what they say, but in reality, I'm pretty certain that the market was supported by liquidity actions of the Fed and particularly the Treasury, because the way that the markets generally work on money flows. So forget the narrative. Oh, Fred did this, Bilbo did that. Something blew up this there, and somebody's boat sank. That's really not what it's about. It's about money. It's about big, large chunks of money flowing about the place. Yeah. So when the Fed pushes money onto the banks go, oh, we're going to do this then. Oh, give it to our traders. Oh, they put it into stocks. Oh, okay, and they do all that highly technical money flow stuff, and the Treasury had been doing some monkey business. As soon as this market collapsed, the Treasury started doing monkey business with issuing liquidity. I hadn't done it before. It's the first time. And I guess Jay Powell was saying, "You've been nasty to me. You're just being nasty. You're telling me I'm an idiot. Okay, well, maybe I am. Oh, so how can we inject money into the system then? Treasury, we control that. Come on, Treasury, pump some money into the system." And that's why Mr. the Wild Man said, "Hey, today is a good day to buy stocks," because he knew they were going to pull the lever on money supply at the Treasury, and they did. Okay, so that's what pushed up the US. But in the US, they've got a market where the private investor is well served. And I tell you, if you go and you do any monkey business in the American market, they'll throw you in the penitentiary, just like that. You know, they will you and put you there for years for stuff in the UK that they wouldn't even notice you'd done. And that's why a load of American scamsters came to the UK market back at about 15 years ago and carried on doing their stuff over here. But because there's not the environment for private investors, there's really not much meat on the bone for them to gnaw on. But in the US, you start doing monkey business in the US, they bust you, and it's not the FCA getting angry at you, it's the Homeland Security, it's the feds. They will they turn you upside down and inside out. So that it's a different environment in the US, and it's an environment where the private investor has been well served. In the UK, the regulator don't want the private investor. It gives them too much anguish. They've been shutting down small cap brokers regular as clockwork for the last 15 years. Oh, you're a small cap broker. Oh, we're going to put you out of business. Oh, you goodbye. They just put one of the leading custodians out of business, Jarvis. Yeah, and they were the ones serving all the small cap brokers, and they shut them down. And there's a whole long record of pretty much a large proportion of the private investor serving brokers being shut down by the regulator, who comes out and said, no, 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 you didn't get the name and address right. Oh, no, no, you've got to stop now. Oh, you haven't got your paperwork in the right shape. Oh, you're gone. Because they don't want the private investor. The regulator doesn't, and misserves them terribly. There's all sorts of monkey business going on hurting the private investor, and they turn a blind eye to that big time. Takeovers, for example, is something that I had some recent experience with. And no, it doesn't matter. You can break all sorts of rules; they don't care, and it happens all the time. Foreign people come in and do all sorts of nasty things to small caps in the UK, and they just say, "Well, come and get us. We're not in the UK." and the regulator says, "Oh, we can't see this. Oh, we're working from home. Oh no, doesn't apply." So you've on both ends, you've got the regulator not wanting the private investor to be around at all because it causes them too much, heartache, and then you've got what they do regulate, they regulate
Yeah.
badly. So no wonder you've lost 25% of your stocks. You don't have a stock
Yeah.
market, and the government says, "Give us all the money for the bonds." No, don't invest it in British industry. No, no, that would be silly, wouldn't it? We need it. We need to spend it in our really capital efficient way.
Okay.
And then you've got that problem. Just have a look at the. In fact, you could say, look, it's about America. It's not that we're doing badly. It's America's doing so well. But all you've got to do is put the DAX against that, and then once you put the DAX against the FTSE 100, you see the DAX is massively
Yeah.
outperforming with the Americans over the UK market. But now the asset stripping is happening, and the market's going to get is being asset stripped. Of course, if you've got positions in the companies that are going to be asset stripped, you'll do very well. And that's my positioning. And it's no good me crying about it. The government is trying to fix it now. They've realised it, but they're in this double bind. So I think they will be doing something shortly, something either this year or next year to try to spice up the market. And it will be about allowing the pension funds to take on more risk with the eye to look at British big caps as a place for them to put that risk in. And who knows? Well, it can't be bad. It can't be bad. It's going good. It could go a lot better, a lot better. In fact, if you look at the French market has similar behaviour to the UK market because you've got the similar sort of government behaviour in France of making life difficult for the stock market. Because remember, stocks and shares are evil. They used to be evil, only reserved for the rich. And they're
Yeah.
evil. I mean, it's against all principles that you should be able to buy shares in a company. That speculation, that's evil, right? It was only really the 70s and more so the 80s where the investing in stocks and shares was not considered to be some sort of evil pursuit of the rich.
Yeah, I think that sentiment still might be in Ireland for a lot of people. But let's zoom out and we'll talk in general because you've written an awful lot of books, kind of investing guides nearly as much as books. And I'd love to hear some of your advice to say someone just starting out in their investing journey. What would be kind of three tips you'd give, say, someone who's just out of college, 23, 24, and they want to begin their journey?
Oh, oh that's a great time to start your journey. That's the perfect time because if you are sensible and serious and diligent, it's one of the few ways a normal person can actually build proper wealth. I mean, the big money wealth, the million or 10. If you start early
Yeah.
enough, and in the early 20s, you can do it. And one of the things to do, if you all you ever did was listen to Warren Buffett and didn't take notice of anything else, you'd do just fine. And you'd go, well, and all Warren Buffett says, it's easy. All you got to do is this. It's easy. There's
Yeah.
nothing difficult
It's
about it. It's easy to do
it's
this.
simple, but it's not easy. Wasn't that one of his lines? It's very straightforward what you have to do.
I,
To do it for 40 years is the difficult part.
exactly. So it is very simple. It is very easy, but people are dragged off the purple path really easily by all sorts of factors. I mean, at some point, your wife's going to say, "I need a new kitchen." You've got all that money in your stock market account. Please spend it on my kitchen, and it's very difficult not to. But that 25,000 when you're 28 is going to be a million when you're
Yeah.
60. And you bought a kitchen, you went on holiday,
Yeah.
and there it was, that thing. Because it's something that people need to think about. If you could get 25% a year, which is what Buffett has got over the years, yeah, you multiply your money, you double your money every 3 years. So in ten years you 10x. That's a 25%. Now obviously
25%
if
a
it's,
year. If some guy out of college is doing that, I don't think he'd be I think he'd be snapped
well,
up
you'd
by
be
few
surprised.
companies straight away.
No, 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 no. That's not right.
No?
That's not right at all. People don't make those sort of returns because they start gambling. They don't start buying dull stocks because I mean it goes something like this. There's a market crash, and if you get in at the bottom of the market crash, you'll make 70% that year. Next year you'll make 40. then you'll make 25, and then you'll make 15, and then the market will crash again. Yeah, and if you average it out, if if you're smart enough to get out before the roof comes in, which is my specialty, then you will get those sort of returns. And you can, if you study diligently, very basic, sensible Warren Buffett style investing, you will start off by getting 7 or 8%. Then you'll start getting reasonable at it, and you'll get 10 or 12, and then you'll start getting good at it. You'll get 15, and then you'll get expert at it after maybe 10 years of study, and you'll be getting 20%. And there'll be no speculation in it. There'll be no listening to people in the pub telling you about the latest crazy thing. There'll be no small caps. There'll be no mucking about. You'll have a diversified portfolio of large, solid companies that are very sensible, and you will get a fabulous return. And if it's under a tax envelope, which is where you have to put it, yeah, the equivalent of an ISA or a SIP, that becomes very, very large money in 20
Yeah.
years and 30 years and 40 years. It's massive money, massive, massive money. As I say, if you just sit down with a spreadsheet and say, I'm going to make 7%, I'm going to make 12, 15, da, da, da. I'm going to put drip, 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 drip. You start to get numbers that make you go, wow. And that's real. That's a real thing. But along the way, everybody will be trying to part you with your sack of treasure. You'll be like Jack and the Beanstalk. They'll be all trying to scam you out of it, left, right, and
Well, let's
centre.
let's let's
And
touch on
that's
that,
what makes it
because
difficult.
you wrote a book called Letters to My Broker, which is about this fella Joe who makes every investing mistake possible. So, what are the pitfalls you see retail investors fall into, and what's your
Well,
advice on identifying them
okay.
and avoiding them?
First, first of all, Letters to My Broker is a book that was written in the 1920s, and I've
Yeah,
annotated it. So it's actually it's 100 years old. It's the same story. And there's another wonderful book called Where Are the Customers' Yachts, which is another book about all the pitfalls of the stock market, which was written in the 1930s. And it's the same old, same old, same old, same old. The point is it's a skill game, and you wouldn't decide to go play tennis against Federer and expect to win, would you? So don't it's not a battle. It's a farm. Yeah, it's not a gamble; it's a farm. So you start off by investing in with an idea of it being a long term thing, and taking it easy and being sensible and being slow, and studying up. And so, for example, every now and again someone says to me, "Oh, will you help me here?" And I say, "Sure." And they say, "What stocks should I pick?" And I say, "I'm not going to tell you." And they go, "Oh, well, that's no help then." I say, "Yes, it is. Go pick 3 stocks and then we'll discuss them."
yeah,
So they pick 3 stocks. And I say, "Oh, well, that's the spicy version of that one. So if you want to go spicy, it's that one. If you want to be a little bit more and less risky, you go with that one." So they go and they pick the spicy one. But it's not that spicy because these are dull, dull shares. But there's dull and there's very dull and there's extremely dull. So that, and then the next month they come up with another 3 and we discuss them and they pick it. And then the third month it will be another oil company like the first one, and I'll say, "We've got an oil company. You don't need another one, do you?" "Oh, I see. Okay." And maybe we'll be talking, I don't know, people that chop down trees, companies or whatever, or a water company or something like that. And every month they put a nut in, and they're going to build up to 30 different companies. And then when they've got 30s, that'll be like 3 years. Yeah. And then they're getting some profits and some dividends, and they can pick some more, and blah, 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 slowly but surely. And, if you want to get rich quick, you're going to get poor fast. And if you just build this stuff up slowly, 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 after 5 years, look at it, go, "That's a lot of money, that is. Oh, wow." I mean, simple story is like if you put a pound in a jar every day, in 3 years, that's £1,000. And nobody can't put a pound in a jar every day. But if you ask somebody, "Can I borrow £1,000 off you?" They go, "Yeah, that's a lot of money." Yeah. So, with the market, not only are you putting a pound in a jar every day, but it's growing. And, companies are paying 5, 6, 7% dividends. And it's tax free because you've got it in a tax wrapper. And there it is. It drops to the letterbox. They can't take that back. And so forth. And The thing is, in the short term, most people I talk to, they go, "Oh, I just read this thing, and oh, everybody's making money. Oh, crypto, bar." And I go, "What do you know about that?" And they go, "Nothing. I need to put money in and make it like my next door neighbor." Well, you're going to be put to the sword, aren't you?
100%. Keeping up
Yeah,
with the Joneses is probably
and that's not the way to do it.
one of the worst one of the worst fallacies you can kind of fall into. Especially, I remember Ben Carson wrote a piece, and it was talking about how comparing yourself to others is kind of the number one way to basically lose money fast. But back in the day, it used to be, your boss lived on the nicest street, one over, and had a slightly nicer car and a slightly bigger house. And now people are comparing themselves to millionaires and billionaire influencers on social media. Instead of the person down the road, it's the person online. And the scale has just gotten so much wider as well.
I think there's an element of truth to that. But when I was a kid, I used to read books about billionaires and want to be one. And I was a kid quite a long time ago. And so I think people have always looked at the big house and said, "How I wish I could live in the big house." And they always watched some, TV show where there are princes and kings and balls, and they've always read books about the upper classes. So I don't. I just an accelerated trend. But I think what you do see a lot of is that people lie a lot more about. The guy next door with his new car was up to his ears in hock and wouldn't tell you that he was struggling to pay his mortgage, but he'd have a nice car. So there's always that element going on. But now people just lie. They rent a stage that looks like you're in a private jet. So I'm in a private jet, and they're not. They pay 20 quid to film themselves in a private jet for 10 minutes. So there's a lot of lying going on, and people are quite naive. And people. I mean, if you went through the billionaires list in the world, I think you'd lose half of them as non-billionaires in reality. It's like the Sunday Times list. I believe, I might be wrong here. I might be doing someone a disservice. They add up all your assets, but they don't add up all your
Okay,
liabilities.
yeah.
So you're a billionaire on paper, but actually you've got 950 million pounds worth of liabilities to counteract
Yeah.
it. So there's all those sort of things that go on. But if you want to live in the big house, you won't get it working for the man. You'll get it from things that are parallel to that. And the easiest, most sensible, the only way that I can say that I know that a normal person can build up big house wealth over 30, 20 or 30 years is by sensible Warren Buffett like investing in the stock market, not day trading. I've made a fairly large amount of money doing that, but I can tell you I don't do it anymore because I no longer have a stomach lining. Yeah. So, there's all these other ways, but the ways to do it without consuming your life and your stomach lining is to actually just invest like Warren Buffett. And there's books by Warren Buffett about Warren Buffett, by his family, about how Warren Buffett is Warren Buffett and how Warren Buffett does Warren Buffett. And all you've got to do is read those books, and then all you've got to do is plod through this, the Gobi Desert of life, and being sensible with your investments to wake up one morning with a very large amount of money, and not have dissipated it by being frivolous. So you've got to be a bit of a miser,
Yeah.
really, because when you start seeing large amounts of money, I mean, over the years, I've scaled my investing, and I've had to re-engineer my nerve endings because when you're a kid, you're doing positions of 5 grand, and that's pretty scary. But then all of a sudden, you're building up and you're doing 50 grand positions, and that is really scary. And then all of a sudden, it's £500,000 positions. You've got to adjust to all those things. A normal person, he wouldn't sleep overnight if he had 500 grand in the market. So you've got to. It's just a plod. It's a plod, a long-term plod. But if you were 23 and you go on it, by the time you're 40, you'll have capital. You'll have serious capital, serious capital. You'll probably be better off than anybody else in of the crew that left school with you, by far. As I say, it's the only way that I know of that the normal person, Mr. Average, can build up proper large-scale wealth. Yeah, I'm not talking about someone that starts is an entrepreneur and starts a business or whatever, or can get on stage and sing or anything like that. just, well, I bought some British Telecom today,
Yeah.
or I sold some Vodafone today, and I've got my 6 books of Warren Buffett, and I keep them in a golden frame, and I will not be dragged off the path of righteousness. So it's the not getting dragged off the path of righteousness that is really, 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 really difficult.
Exactly. And then I suppose that's the hardest thing to imagine when you're starting out as well, is to think in that kind of time frame from the jump. It's so unnatural for people to be able to kind of be
I've
that
heard
long
people
term.
say, if I was only going to make 25% a year, I wouldn't be doing this. And it's like,
Okay.
do you're going to double your money every 3 years for the next 30 years. So you're going to double your money 10 times, 2, 4, 8, 16, 32, 64, 128, 2, 5, 6, 5, 12, 1,024 times your money. And that's not good
Yeah.
enough.
Yeah.
And, even if you just sit down with that spreadsheet and go compound it by 7, compound it by 10, compound it by 15, and look at the numbers, you'll go, oh, that can't be right. My spreadsheet
Eighth
broke.
wonder of the world, compound interest.
Yeah, absolutely the eighth wonder of the world, as long as you've got a tax
Yeah,
shelter for it.
absolutely. Okay, well,
If you haven't got a tax shelter for it, you get top sliced all
yeah.
the time.
Well, let's talk probably an investment that would suit the kind of the Warren Buffett psyche. He likes to find these great American companies on a bargain, and that's Intel. So you wrote a piece about Intel about the start of the year, was it?
Well, I'm not a Buffett. I am a contrarian. You see, FOMO kills you, but contrarian is the opposite of FOMO.
Yeah,
Yeah, because you don't fear missing out. You don't. If everyone's into something, you want it. If someone wants to sell you something, you don't want to buy it,
yeah,
right? If somebody wants to buy something off you, you don't want to sell it, and that's FOMO, right? Is everyone comes out and says, "Oh, this is great, this is great, you need to buy this, this is great," because actually they're trying to sell it to you. Yeah, but if you go, nobody wants that one. Oh, what's wrong with that one then? Oh, it's not. No, I can't see anything wrong with that. I love that. So Buffett used to be a contrarian in as much as he would buy shares which nobody else wanted to buy. But basically, he would just say, "What's the value of it, and what price am I paying?" Whereas I go, everybody hates that company. Is that right? Why do they hate that company? Everybody's scared of being in that company because of this happened to them. But isn't that all fixed now? So it's to find things that everybody hates and then pick it up. I mean, Rolls Royce is a classic example of that because they had one of the best engine, well, the best engine technology, and everybody was hating on them. Oh, Rolls Royce are a British engineer, they must be rubbish. It's brilliant. These guys are brilliant. They're strapped on all the planes. They're brilliant. Oh, they must be rubbish. They're British. Oh no, who wants a jet engine? Oh, it's English. Oh, rubbish. You know, and it was. I mean, it's gone up 10 times. I think in the last 5 years. It's unforgivable that any company with a massive sales, with a fabulous brand and the leading technology, should be able to go up 10x. It just shows that the market in the UK is horribly, horribly broken. But as a contrarian, I don't fear that. I don't fear the Reaper. I want to own
yeah.
that. I go, well, which American jet company is going to come in and buy them and steal that? Because that's going to happen. So as a contrarian, I look for value and that everybody hates for there's value there, huge value, and everybody hates it. That's my dream
Okay,
company.
so one particular contrarian investment you wrote about was Intel. I'd like to hear your thoughts on this
Yeah.
and why you believe.
Well, Intel's classic. Oh, they're rubbish. They are. Oh, yeah, Intel can't get arrested. They're rubbish. Oh, totally rubbish. Oh, really? Why is that then? Oh, well, they only make the most clever pieces of engineering that humanity has ever created, but they're not Nvidia, so they must be rubbish. So, underpinning all this, there's something that is going on, which is kind of interesting and difficult actually, because a lot of funds, hedge funds in particular, what they do is they go long one thing and they go short another. So they hedge. It doesn't matter whether the market goes up and down. They buy the strong company in a sector and they sell the weaker one. Now, what happens is the weaker one gets better and better value because they're artificially being sold to create this pair, right? And the one that's long gets artificially
Mm,
expensive, like Nvidia. So when the Nvidias of this world go ridiculously high, there's a whole load of shares being stomped on, because they're being shorted to death. And Intel is one of those examples. So you see that and you go, okay, I understand that. And then they get ridiculously cheap. And then you look at that and you go, okay, ridiculously cheap. And then you look for something that's changed. Well, if you've got the madman of the White House is trying to, pick a toe-to-toe fight with China, particularly over Taiwan, and it's all about chips and AI chips and the ability to make chips. If you can't make chips, you can't make missiles. If you can't make steel, you can't make ships. Yeah, and that's what's going on. So who owns all the fabs, i.e. the bakeries for silicon chips? Well, they've outsourced them all. They've handed them off. All these companies said, "Oh, we don't need to manufacture chips. Let the Chinese do that. We'll just make iPhones. We're a software companies, really." So people like Nvidia don't make their own chips. People like AMD, they took their fab and they sold it, put it in a different company, and said, "Go
Yeah.
away, get run
Global
off, run off."
Foundries, is
The
it?
only people who didn't was Intel.
AMD, they
Sorry,
sold off, is it Global Foundries?
Global
Yeah, yeah,
Foundries,
yeah.
and there's another one that escapes me right now. But Intel, they are the fabs. All the American fabs, most of them are Intel. All the European fabs, most of them are Intel. So if you've got the Chinese about to, the Chinese got these boats that go on legs because the only way they can invade Taiwan is for boats that can go up cliffs, because Taiwan's one big cliff and three beaches, and obviously you can look after the beaches. There's only three of them. The rest of it's cliffs. So they've got these boats on legs. They're like War of the Worlds fighting machines. So they come in and they go up on the legs and then go onto the cliffs. So, and that's where all your chips are being made. All your Nvidia chips are being made in Taiwan. So they've got to bring them on board, haven't they? Got to bring them back to the US. Well, who's got all the fabs already there? Intel, right? And they're as cheap as chips. So with the make American chips great again, you're going to be looking at people with fabs. Because Nvidia could go, hold on a minute, let me look down the back of my sofa. Oh, here's the money. I just bought you Intel.
Yeah.
Because they're a $4 trillion company and Intel is 200 billion or something like that. So they have been pushed down so far, they're basically pocket change for anybody that wants to have a whole load of chip making equipment in America, in Europe. And so, that's your classic contrarian. Because someone say, "Oh, they're rubbish. They are. Intel are rubbish. They're rubbish." What are you talking about? Oh, their chips are out of date, and it's 47 nanometer squared rather than the 6 nanometer squared and all that stuff. But actually, Intel's about to break into the game of the best, hottest, latest, greatest, smallest transistor market. That's happening this year or early next year. So they are actually on the warpath to catch up, and they will catch up. And their fabs will not be in China, God forbid, and won't be in Taiwan, which is a little bit sticky. And anybody that wants to, cozy up to people that can actually make chips in America, somebody like might happen to be in Washington or in the Pentagon, they've got to go to Intel because Intel's got all that stuff onshore.
Okay, it's good. It's good encapsulation of kind of what you're looking for as a contrarian as well. I want,
I'm looking for people that go, "That's rubbish. That's rubbish." And I go, "Is it rubbish? Let's
yeah.
have a look." "Oh yeah, it is rubbish." "Oh yeah, no." Or, "Oh, that doesn't look like rubbish to me. Oh, that looks like it might be quite a
Yeah,
good thing. Oh, they looks like that. Yeah, what's going on there then?"
good stuff. Okay, I want to talk about another type of investment that you've talked about a lot in your writings, and that's gold. How are we doing, folks? I hope you're enjoying the conversation we're having with Clem. Just wanted to pop in to make sure you know that we are still running one of the best offers we've had on Stock Club so far. So that is, you've all heard about Investicon. We've interviewed some of the amazing speakers that are going to be there in Dublin in August. You can get a ticket for absolutely free. That's if you are a new Horizon member. So if you sign up for Horizon within the next few days with this offer, you're going to go to Investicon absolutely free. You don't have to pay a cent for a ticket, which will be one of the hottest investing conferences this summer. Look, you all know about Horizon, but just a quick reminder, that is investing side by side with one of the greats in Emmett Savage. This is a brilliant offer, and that's it. I'll go back to the pod with Clem. It's probably something retail investors wouldn't consider too strongly. And I just really want to think about how would you would do you think that all retail investors should own gold? Do you think it's a timely thing? Are there certain periods in certain markets where it kind of should be an acquirable asset, or is it kind of look? I put 5% of my portfolio on gold and forget about
Well, this is where my
it.
contrarian comes in, because I hate gold. I mean, why would you want gold for? I mean, gold was, good for teeth. They don't use it for teeth anymore. It's good for jewelry, bangles, and stuff, and it's good for electronics. Fair enough. There's a demand for that, but all this mania about gold. Oh, gold, it's the real money. Oh, the dollar's going to collapse. All that stuff you've heard ever since you were a child. You know, but then it wasn't long ago. I thought, well, I mean, I love gold as a metal. I love it. It's a lovely thing. I've got gold watches. I've got gold coins. I love it. I love gold. But as an investment thing, I don't see the point of it. And then it dawned on me: why do governments keep rooms of gold? Why? They're not going to be minting sovereigns again. Why have they got billions of dollars worth of gold stashed? Why do they stash gold? Why don't they? I don't know. Stash something else. Why don't they stash Swiss francs? Why do they stash gold? And then it dawned on me: governments stash gold for only one reason. Gold is for war. It's the currency of war. Yeah. There's battleships full of gold that sunk to the bottom of the sea that they go dive down and try to get it back out again. Because if you're going to pay for whatever it is you're going to buy off a country, you ship it in a battleship in gold. Yeah. Because they don't take your government bonds. They don't take anything. They take gold. Okay, so if you're going to want to fight a war, or feel you might have to at some point in sometime in the future, you've got to have a reserve of gold, because that is bullets. Yeah. So when somebody like Gordon Brown flogs off the gold, it's because he's a pacifist. He doesn't think we should be encouraged to go to war. And if we sell off the gold, we won't have the money to go to war, which sounds quite sensible, really, when you think of the way the British go to war in random places for apparently semi-random reasons. But gold is for war. That's why countries have gold reserves. Okay. And guess who's been buying lots of gold? China. Why? Because of a certain gentleman in the White House who's going rah 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 rah. And really, you're looking at this never-ending increase in global tension. Well, if you are the Indian chancellor of in charge of finances, you've got to be laying in gold. If you're any country with tension going up, you've got to be laying in gold, because gold is bullets. Yeah, and I wonder if the UK government is laying in more gold, because the damn well should be, with all the stress going on in Europe right now. But certainly, Russia's not short of laying in gold. China's laying in gold. All these countries are laying in gold. So guess what? The price of gold is going up. The more tension goes up, the more the price of gold will go up. Not because everyone's getting stressed out, not because Mr. Miggins is buying an extra sovereign, because governments are buying it. And when governments buy it, all those bankers that play the private investor like a violin, they have to get out of the way, because governments are by the they're going to take delivery of that gold. They're not going to be messed about by a load of investment bankers trying to do pull a flanker on them. Get out of the way. Gold's going up because governments are buying it. That's why silver hasn't really carried on with it, because silver isn't for war. Gold is for war, and Bitcoin is for flight. If you want to get out, if you had to leave Dublin with all your millions of pounds, you'd put it in Bitcoin and you'd get on the next plane. Can't do that in gold, because you can't get
Mm.
it in your
Yeah,
luggage.
you can't fit it on the carry-on. But let's talk
Yeah. So
let's talk Bitcoin. So because
oh,
you wrote a book back in 2017, I think, on about trading cryptocurrencies.
yeah,
So
yeah,
you
yeah.
are
Get
well ahead
crypto
of the curve here.
good
I
for me.
think the blurb of the book says from $0 to 6,000, and the wealth you could have created in that space. And I think now when it's at 110,000. So what have you seen since then, in the whatever it is 8 years since, how the industry has
Well,
developed?
I think I'm really, really not in crypto anymore, because I can't really walk down the street in certain countries and risk getting hit on the back of the head with a hammer. So, at a certain amount of crypto, you become vulnerable. Not in the same way with equities, because no one can steal your
Yeah.
equities. And in fact, even with your bank account, it's very difficult to, once your Bitcoin's gone, it's gone. right? And I've been in and out of it. I was in it 17, did very, very well. I was in it in 20, did very, very well. I was in it this cycle, was very, very well. But I was out at 100K, goodbye. That's the top of the cycle as far as I'm concerned. That's quite a long time ago now when it first hit 100. And it's still around 100. Now, for me, I just always pay a little bit of attention to the weight of an asset. Now, when I say the weight, I mean, what's the market cap? Now, the market cap of Bitcoin is 3 trillion. It's about a third of gold. Yeah. And it's a secular thing. Cyclical, secular, cyclical thing. It's a 4-year cycle. And we're in crazy town at the moment, as far as I'm concerned. All the crypto bar Bitcoin has gone onto the back foot and has fallen really heavily. Bitcoin is up there because this idea, Mr. Saylor's idea of having a treasury, and somehow people will pay more for Bitcoins in his company than they can buy Bitcoins at. And I think it's the end. It's the mad crazy end of this particular crypto run, and I don't think it's going to go to 250, although that's what people are saying it could do. If there's another reason for people to do a runner, then it could go up quite a bit. And you've seen the pop that you get every time one country bombs another. And so you've seen that people go, oh, it's getting a bit sticky here. I might have to go to the airport. Up goes Bitcoin. Oh, it's all sorted itself up. Down goes Bitcoin. So there's an element of that. And you saw what happened to Bitcoin when Iran had to turn off its Bitcoin miners. So there's a lot of that funkiness in Bitcoin, which makes it quite hard to predict. But I would say that it's had its moment this cycle around give or take 10 or 20%. And there's so much more upside in equities. So that's where I am. And the pestilential levels of criminality in crypto, it takes away. I've lost taste for it because of that. And I mean that all over the place there's people trying to steal your crypto. This is just every day. There's never been bigger robberies than there's been robberies of crypto. Butch Cassidy and the Sundance Kid, Ronnie Biggs, they've never done robberies anywhere near the sort of scales that goes on in crypto with all these blooming North Koreans robbing everybody. And it's a very, very, very difficult place to inhabit without having a high risk of loss of your crypto. And you can go onto Google and click on an paid advert and lose all your crypto.
Yeah.
And it's just everywhere you look. There's beyond cocking up your wallet and losing it because you drop your computer in a pond or something. There's just a million and one ways to come unstuck with crypto. So at some point, for me, it's not worth the bother or the risk, because it's been very, 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 very good to me. But now it's not the crazy new thing that's not connected to the financial markets. It's not the unregulated thing which nobody knows about that I can call because I'm good at it and nobody knows what they're doing. It's matured. It's now part of the financial system. It's now basically dollar denominated through stable coins. And it's now connected to all the vampire squids of Wall Street. So what's going to go right? And the government's got their hands on it now. So that's not good, is it? Really, not when you think about what it was meant to be. It was meant to be this, libertarian anarcho-capitalist thing that was going to show these corrupt governments how to run finances properly. Well, now it's part of them. So it's not the dream that it's set out to be. It's now just another asset.
Yeah.
And it's just another asset. I have some, but nothing, not on the scale that I'm hijackable anymore. I don't. It's purely security aspects of crypto that put me off it. And one click, one false click, and all your
Yeah.
crypto's gone. Oh, you can put it in a cold wallet. No, there's no such thing as a cold wallet. Oh, but there isn't. No such thing as a cold wallet. And all this reserve, Bitcoin reserve stuff that's going on in the markets right now, that's clearly mad. Yeah. So let me get this straight. I can short Michael Saylor where his Bitcoin is 180% of the Bitcoin price, and I can go long Bitcoin. How can How can, if I can buy the real Bitcoin, I'm going to buy Michael Saylor's shares, which is Bitcoin, and his is 80% more expensive. Why would I not short that and go along that? That's the biggest brain dead trade of all time.
Yeah, if you can last long enough for it to actually make sense.
Well, it's a diversified portfolio
Yeah,
of risk. It's a no-brainer, right? Because ultimately, he can't be, even if it's 7 years in the future, he can't be worth more than his Bitcoin, can he? Because that's what he is. And if I go to some noddy company in the British stock market who used to do, I don't know, inflatable widgets and now says it's a Bitcoin treasury company because it's just decided he could get some money that way, well, I mean, why wouldn't I short that and buy
yeah,
Bitcoin?
absolutely. It's a very strange phenomenon going on of this Bitcoin premium just because you can buy it as a part of a stock instead of an actual, because it doesn't make sense. It might have made sense back in the day when Bitcoin was hard to access. Do you know?
It makes perfect sense. It makes perfect sense, and this is the perfect sense. I am a gambler, and I don't gamble on horses. I don't go down the casino. I don't gamble on fruit machines. I don't buy the national lottery. I go and I buy gamble shares, and I gamble on crypto and I gamble on shares. And there's this company that's doing it. I read this is a big thing, and someone in America did it and it worked. So it's going to work here. I'll have some of that. Thank you very much.
Yeah.
There you go. It's just I, it's like you bet on horses. Oh yeah, I like horse racing, but horses don't do anything anymore. They used to pull carts and used to go into battle on the back of one, and now all they do is they run up and down a piece of grass. What's the sense of that then? Well, it's fun, just
Just
like the
like the
stock
stock
market
market.
is, but it costs you. It costs you. The market will pay you in the coin that you want to be paid in, and if you want to be paid in excitement, it will pay you in excitement. It won't pay you in cash. If you want it to pay you in cash, it'll pay you in cash.
Very good. Okay. Clem, I'm going to finish this. We put all our guests on the spot to end out the show. So I'm going to ask you now your top three favorite investments this very minute. It can be any asset class, anything you like. Just what are you kind of fancying now?
Now, I'm going to recommend the least sensible parts of what
Okay.
I own on the basis that obviously they haven't gone through the roof yet, and therefore they will in due course. So I absolutely adore palladium.
The precious metal. Okay.
Yeah, palladium, platinum, and palladium. Now, once upon a time, cars were going to go out of fashion. Remember them internal combustion engines? We weren't going to have any more of them. Well, that's all gone away now. You're going to have internal combustion engines, and you're going to have them boiling the oceans. They're going to be boiling the oceans because of AI. And the only some of the things that will ameliorate the absolutely apocalyptic amounts of energy that they're going to be generating is platinum because it's a catalyst that can take exhaust fumes and make them less lethal in a nutshell. And they're going to be there's going to be a massive energy boom ramp. They're going to be they're going to be burning peat. They're going to be burning everything to get energy to do AI because there's no second place in AI. If you're second place in AI to someone else who's up against you, you are lost. Yeah. So America is going to boil the oceans to be smarter AI than China, and China's going to be boiling the oceans to be smarter than America with AI. And of course, Europe's going to have a go, and India's going to have a go, and Russia's going to have a go, and they are going to be boiling the oceans. And they're going to be burning coal. Coal was going to go away, wasn't it? Once, oh no, they're going to be right the way down the hydrocarbon chain, and all the windmills, and all the solar panels, and everything, all the nuclear power. They're going to be running it all flat out for AI. Okay, and one of the things that ameliorates that is palladium and platinum because they will break exhaust fumes up and turn them into less lethal gases and less polluting gases. Now, the key thing is they only make, and this is just ridiculous, 200 tons of platinum a year, 200 tons of palladium a year. That's all they produce. 3,200 tons of gold, 200 tons of platinum and palladium. I've got the number 100 in my head, but let's call it 200. Who cares? It's like, you know, it's like three
Yeah.
suitcases. They're like none. Yeah. So that's going to just go nuts at some point because people haven't worked it out yet that all this, no coal, net zero, that's all going away. That's all going away because of AI. Because AI is energy, and the more energy you've got, the more AI you've got. Well, you're not going to stop when your windmills have run out of gas, are you? Because there's no second place. There is no second place. There is no limit to how much AI you need and can have if you've got the energy. So you're not going to say, "Oh, I'll give up now. I'll be conquered by the Chinese because they're smarter than us." There's
Yeah.
no limit. There's absolutely no limit. It's like there's going to be need to be something like a nuclear proliferation treaty, if anyone gets sensible about it, because there's no limit to how much intelligence you need if the people you're competing against are going to be smarter than you. How can you possibly win if your competition's smarter than you? You've got to be as smart as them, and you actually got to be smarter, haven't you? So you've got to burn the energy. So it's all bets are off on getting rid of hydrocarbons, and the only way you can ameliorate that damage is with platinum and palladium, and they only make 200 tons of it a year.
Okay. Very interesting. Okay, I'll rush you now for two more if you have them. If you don't, Palladium was a very good.
I mean, I like
Intel's a good
Intel.
one.
It's back to this. I'm back to. I like Intel because Intel's got this situation with the fabs. It's one of the place for fabs is
Okay.
Intel. So that's interesting. And let me think of another one. I People hate this company with a vengeance, which is probably the reason why it's a good buy. I quite like Capita.
Capita.
Capita IRG, as they used to be called. It's a government services business. I mean, they kind of they'll run your prisons for you. They'll track your paperwork. They'll do all sorts of government services. They clean your toilets. It's was a highly valued company, and it bought anything it could lay its hands on. Got up to its ears in debt. Share price collapsed, and they've sorted out a lot of it now, and it's due for a comeback, I think.
Okay. Okay. That's probably the three most diverse investments we've got on Stock Club so far, but I'm very interested.
They're all
Yes.
contrarian, right? Capita's contrarian. Everybody will tell you what a rubbish company that is. Yeah, Intel, they'll tell you how rubbish Intel is, which they're not. And then, to say that they're going to be, boiling the oceans because of AI, people haven't worked that one out yet. They've worked. If you go looking for that information, you'll find it. You'll see people doing like that's why Trump's reopened the coal mines in Virginia. That's why they're building nuclear power plants. Remember, nuclear power plants were like anathema, were like the spawn of the devil. Only for most of my lifetime. Oh, nuclear power! No, no, don't do that! Ah! And all of a sudden, oh, we need lots of that now. Please, let's have nuclear power. Oh, yes, put it on your Rice Krispies. It's wonderful. Yeah. What do you think that is?
Yeah. Yeah. No, it's true. Absolutely. Well, sure. If nuclear power they can do clean, it would be amazing. If
They just need
yeah.
the energy. If you come second in AI, you are toast.
Okay. Okay, Clem, that was a really interesting conversation. I think I learned an awful lot from you. Tell our listeners where they can find you, and if there's anything you'd like to.
Well, I'll be opening a new site, new information stocks and shares information site coming up in almost a few weeks, which probably means a month or two. But we're getting pretty close to it. It's called a new FN, and so if you go to a new, as in a new FN, as in financial network.com, if you put your email down, you'll be in the early group of testers who get all our glorious stuff, which is going to make a few people's eyes bug out, I think.
Brilliant. Okay, I'm excited to see it. Clem,
So, newfn.com.
Clem, it was a pleasure to have you on. If anyone wants to learn more, anewfn.com. Everyone else, thank you very much for listening. We'll talk to you next week.